start with just some of the basics. And we will start with just importing some accounts. So as you might know, you can import from LodgeiT from various systems, and you can use that downstream accounting data to fill the financial reports. And in this case, I'm going to import from Excel. So I have a set of accounts here in Excel that I'll import and load in. And what I'll do is I'll just open that Excel file so you can see what it is that we're working with. So essentially what we have is we have a template which is available from here, which I chose, and I'll choose it again.
So that's your template.
Yeah, so I've downloaded it. Yep, I've downloaded it, and then I've filled in the slots because it says insert above, right? So I've already done that prior to the meeting.
Yeah, and you can add new lines in there or not. Exactly,
you can add as many lines. This is just Excel, so you can create it how you like. But as long as you stay within the guardrails, you're fine.
Yep.
Okay, so so there's a couple of things to note when you fill this in. Everything is a positive value, but for the exceptions. So the exceptions would be something like, so if you represent, say, opening stock plus purchases less closing stock, which is a credit, in what's otherwise a debit section, minus. If you had a bank overdraft in the current asset section, it would have a minus sign on it. Your accumulated depreciation minus, your unexpired interest, which is a debit in a credit section, minus, and finally your dividends paid, which will be a debit in the credit section, minus. And make sure your retained earnings roll forward from the previous year, and make sure your current earnings or net profit is equal, right? So there's just those core accounting functions that you need to make sure are right, because Excel is unforgiving, and our system won't care if you make mistakes. If you've got a balance sheet that doesn't balance, our system is not smart enough to know that.
No,
it'll just let you do it, right?
Yep.
So all it does, you end up with that kind of pattern, your balance sheet, and then you go to work with your classification. So the classification is pretty easy. You can see these are the Excel line item names, and this is the classification pattern on the right. NAB 5510 classified to bank account. Now, it is possible the system will make a mistake. Classify it to, say, inventory. You need to click in there, make the fix. It's also possible to use predictive text. So you just click in there and type bank account, because you know that's a category. So think of these not as accounts, but categories for your accounts.
Yep.
Okay, and there are links, because certain accounts, if the system just uses an alpha ordering, it'll put that above that. So you need to say that these two are related, and they're related because they're both in the category linked to the relevant exact category, and that means there's only one there to link, right? So it's pretty basic. Okay. It gets a little bit more tricky with, say, when you've got multiple of them, and then you need to just, like I notate with the current versus non-current for my hire purchases.
Yeah.
And in the case of this current, you've got, the unexpired component for the Mercedes and the Stratton, and you've got to link the unrepaid component. So in this case, you can see you'd have two options, but of course we know this is Stratton, so it's Stratton. Okay, so you've got linking there, which plays a part when you generate your reports.
Are you doing this every year? Or
no, you're doing this once, and the system will remember. But then if you import a second year and then there's a new line item, you should probably check the new line item.
Yeah.
Right. So the tags are for tax purposes. They will drive behavior on the tax forms and have nothing to do with generating reports. So we're staying focused on reports today.
We're just going to use it for finance.
You can see I've got a signed variant. One's already been signed. I will leave that one there, and I'm going to start from scratch. So I'm going to add a new report, and we're going to work with free first. So you've got two options for every entity type, noting that this is a company, right? So if I went and showed you this, you can see it's company. So each of the entity types has a different report structure. So in the case of a company, it's got a company report structure, and the system knows that, right? As long as you get your settings right, you'll be fine.
So the main thing, we would probably only be using it for super funds.
Okay. Well, I'll show you generally, and then I'll show you how to learn about the super fund side of things.
Yeah.
So let's go. In this case, it's a trading entity, right? Because it's got cost of goods and it's for the 25 financial year. So we create, and you can change the name over there as well. Once you get inside here, you've got a degree of flexibility. You can move things around. You do get a statement of cash flows, but notice that our system is not intelligent enough to fill it all up for you. So therefore, if you don't need it, just take it out.
Yep.
Director's declaration. Now, you are going to need to know how you're, in the case of a company director, in the case of a super fund, the director of the corporate trustee. You need to know how that name gets in there. That's probably a core requirement to understand that, and that's all driven through the relationships tab.
Yep.
So you need to know that in this case of a company, you have a director that does the signing. So I'm just going to unlink and take that director out. But to put it in, add relationship, and then just search for the director. So we've got James Henry Doe, and he's the director. Don't have to worry about the start end date. You just need, in the case of a company, you need a director. Now, if you are working with a super fund or a trust, then you need to check the relationship, because if it's a sole human trustee, then it's easy. You just link a human trustee in here. But when it gets a little bit more complex, you link in the trustee, which is the company, and you must go to the company and make sure that the company has that relationship of a director. And then the name of the director will flow through to the reports of the super fund or the trust.
Right.
Okay.
So essentially got to set up the trustee company.
Exactly. Yeah.
And put the directors. So each director or signatory is set up as a client, and the customer.
Yes. As a client. Yeah. We don't know. Yeah. Just client concept. Yep.
Okay.
Each one will have its own little thing there, and you could see them in the client list.
And you can link them all so they're all sort of related.
Yeah, that relationships just allows you to establish all the linked relationships through. Now, there's one other thing you'll notice. You want your compilation report, which will have your name. Now, of course, you can click into these things and make whatever changes you want. You'll notice I've got my name there and the details about myself. So how does that get in there? The way that gets in there is you need to go to the, so this is the company, but we're going to go to the gear wheel and we're going to go to the little face. So this is my little face, because this is me logging in. Are you the only person in your firm that will sign?
No, there's 3 partners.
3. Okay, so then you've got a slightly different approach, but you do all need to load your own signatures. Easy way to do that, just use a snip tool. Draw this on a piece of paper, or scan it in, or just draw it with Word or whatever, and then snip it out and save the image and upload it. So each of you must upload. Now, in your cases, it's a little bit more complex, because for me, I would just, and this is the way I've set it up, I'm the only person signing, so I go to settings, default signatory, and I just select myself as the default. That's not going to work in your case.
Yeah.
In your case, for your firm, you're going to have to tick use the client owner as the signatory. And then for yourselves, you go to clients, and each one of your clients, you must establish an owner or a principal or a partner. Yep. So in that, Aaron is mine, I tick, and that becomes mine, right? And you'll see that my little face there will be the client owner. So you need to establish your owners in your firm to get the right name to show up. Now that you know how to get your name in there, then you can keep going with whatever changes you want to make. So in terms of what you can change in our reports, you will notice that they have an indentation function. So indent along the lines of the categories imposed by the structure of the taxonomy. And if you don't like the indenting, little gear wheel, click, you take away the indents vanish, and it's all left justified. And then from there, you can do further stuff, like you might go, well, for the investments, look, there's 2 different ways to approach this. You can expose the underlying line items, whatever those might have been in the Excel file or the, or the QuickBooks or the Xero file.
Mm-hmm.
Or you could roll it up to that level, or you could roll it up, you could roll it all the way up to this level. And you might even go, you know what, we just don't need this other category here. So let's just ungroup investment revenue, and then you've just got the dividends received under other revenue.
Yeah. Yep.
Okay, so from there, you can just take out, you can either roll up or just disambiguate the category entirely. Like, for instance, human resource costs is in the system because there's just so many different types of human resource costs. It's got its own category, but if you don't need it in the report, take it out. And that gives you a more simple looking report, right?
Yep.
Same thing through the accounts. If you don't like the categories, you can manipulate the template. Because if you're going to be doing this on a regular basis, you need to consider just making your changes at the template level. So what I'll do is for this example, I will take out all the categories to make it super simple on the balance sheet. So we go to the system gear wheel. We go to our report templates. And at the report templates, remember we're working with the free variant. If you want to, do you think you'll use notes? Maybe what I'll do is I'll show some manipulation at the report level for the paid variant as well. But I'll start with the free variant. Now you can see here you've got to watch out because these are structured along the lines of company, individual, partnership, trust, super fund. Yeah. So you want to manipulate a template for the given entity type you're working on. In this case, it's a company. So I'm going to manipulate this template by creating a custom template. The first thing I'm going to do is change the name on this thing so I know how to find it again. So I click the settings and you'll see it pops up with the name here, the name field. So I'm going to change this to demo 11/12, which is today's date. I don't need to click save or anything. It'll define itself in the background, and then I can go and make whatever changes I want. So maybe the first change I'm going to make is going to be in the balance sheet. Now you can see these are all the categories, right? So if you're not going to be worrying about all the categories, you can just navigate straight down financial position. You could even change the name of the reports. In the case of so this financial position, we have a lot of categories, of course. Now, if you figure that you just want current assets only, then you just need to go and remove all the categories here. And then when you generate your reports, it's always just going to generate with just current assets category. And you'll just have the simple line items that you sort of imported sitting under that category structure. So it only take a little bit of time to just come through. Look, you might decide to leave some of the categories. It's up to you and change the names of the categories. But doing it in this way, you only have to do it once, and then you can reuse the template across your reports. So now we've just got current assets, right? So we've done that. We've named our report. And now what I can do is I can go back to the company that I'm working on, and we can add in another report because we're going to use a different category, a different template this time. Still 2025. Okay, the year already exists. Okay, and and I'm in forms by mistake. So let's go in here, add the report, not a form, and this time it is demo 11/12, and whatever you want to call it, create. And what we have now is we have, in our statement of financial position, we have just that current assets. Now you can see when you actually look at what it will look like in a printed variant. So now we've got, and here you get just that kind of look, very simple, right? Yep. So you'd get a balance sheet easily on one page as long as it hasn't got millions of line items. But of course, you might have financial investments like that where you might go, you know what, I'm maybe just going to roll that up, Okay, so that gives you whatever you need here. And as I said, don't need cash flow statement. If you want to make any notes on the financials, of course you can change anything in here. Contingent liabilities.
Where's that picking up which notes?
Well, in this case, the note is just a note. It's literally one note. Right? Note 1, and it's just the basis of preparation. It doesn't get any more detailed than that, right?
But the inventory, so the inventory's note.
Yeah, so look, if you're doing a super fund, you're going to take that out probably, right? You're going to have to manipulate.
So right. So it's not coming there because you've used inventories. It's just the standard.
Correct. This is just the free version, which just simply, it doesn't do anything more than, you've just got this fixed set of information here, which you can extend and change. Again, you don't need to save it. It'll just save as you work. Now, when you're happy with this report, what you can do is you can complete it. The report at this stage will be completed and you can't make any further changes in it, right? So you better have done all your changes by this stage. And then what you can do is you can request your e-sign. Now, the way this is going to work is if you wanted to attach another document, you can. The recipient, we're going to send it to myself. And then next, it'll go out with the email, whatever email template whatever you change in here will go out. Now that has now gone. And if we went to Gmail, okay. It'll take a bit of time for this to come. So let's just wait and see. Financials arrived. So now this is the client user experience. They'll see your logo, your colors. As long as you've loaded your logo and your firm details are in there, then the client can review and sign. In this case, you noticed I removed any requirement for, verification on the way in. They can just click the link and then they can literally scroll through this thing, get started and, put their signature in and agree.
Okay.
Okay, so that's the user experience from the client point of view. Where's my? Okay. So let's go back to Edwardson. Okay. So that was how we sort of build out a report, send it out for signing. Now that's out to sign, and you'll see it as out to sign here. In fact, now you can see it's popped as signed, right? So I signed that today, 11th of the 12th. To publish that, the publishing trick is to go to the Work tab, and you'll see now that it's waiting. And what you can do is you have to do this through the Work tab to publish it or to finalize the report so that it's not just sitting. You move it from here and you just publish that report and it'll move to finished. Okay, so in the Work tab it's finished, and at the reports dashboard level it will be published. So that report is published. If I go back to that entity under, no, not under there, under reports, that's now published. This is the one, 11th of December. I've published that one that we just worked on, right? So you will also have a copy in the file store. There's the signed copy. Okay, it's got the hash on it. And if you have a look, well, there was depreciation reports in there that I'm not dealing with today, but they are there. Now that was sent, viewed, signed, and completed. That's your user experience, and the client will have a user experience where they will get one more email that will say thanks for signing. They can download that exact same document. So they get a copy once it's signed off. Now, what we will have a look at now is just if you want to use our noted variant. So the noted variant, let's actually manipulate the template on the noted variant. Again, we go to the reports templates. We've got our Financial Reports Pro, and this is where you get the full notes if that's what you need. Not everyone needs full notes, but I'll show you anyway. So again, what we're going to be doing is, and you can see these are all my examples that I've created over time. So again, what we're going to do is we're going to start with the LodgeiT create a template. And again, I'm going to change the name so I know when I'm looking there what it is. I can do the same name again because this is a different variant. And then what we can do through here is we'll just see how the notes sort of, we've got notes in here. You can see where the notes are already built in. But for this one, I want to show you how to manipulate the template to some degree. So we want to add another note. In this case, we're going to roll up our direct costs and we're going to expose the direct costs as a note. So we're going to link it to a note. Now, the way I like to do it is I like to build my note first, and I'm going to build it right on the bottom of this note structure. And I'm just going to add a brand new note. So it's a financial note. You can just play around with all these other things, and I'll show you some of this as we go, but let's add in a financial note. So direct costs. And what we want to do here is we want to add in, so for the direct costs, we want to add in, so you hover over the direct costs section here, and you add in a group, and you can just call this the same again. And then with the group, so you go from that level there, where you've added the group, to adding in the line items associated with the group. And these will be our direct cost line items. You could do it at another level, but this, we want the full direct costs. So now we've got our direct costs as, and this is number 23. So we might go, well, you know what, that should really be after, direct costs should be the next thing after any revenue notes. So you just drag it up. Balancing adjustments, capital gains. Okay, it's after this. Other revenue. So we'll put it after other revenue. Note. So I dropped it there. Now you can see it goes to 18. So if we go up to trading account now, we need to link that. And we link that by looking for our direct costs. So now we've got our note in there. We might do something else as well. We might just add in some other notes. So we might just want a general financials note without any sort of, so this will be just if content added, because you can just make sort of notes with, you might just want this note with, say, it might be a text kind of note, and you might want a header, right? So in this case, we don't need this bit. We're just going to have the header, right? And then we might even go and put in some subheaders, heading 2, and you'll note that it'll go to like that, 25.1. Then you'd put in your content, which will be your text block, right? Now you might only put in at the final stage. So let's just, but you need a heading there, header 2, whatever that is, because you might even extend this out and put in, like, you might put another heading, this is another header second, and then again you might want to have multiple notes through this. So heading 1, delete it out and put in heading 2, right? Header again, whatever that is, and text, and then heading 2 again, and text, whatever these headers need to be. So header second, header lower, whatever that is. Now, of course, you could just leave these. So now this note will be automatically hidden unless, of course, you put some content into it when we finally put it together. You can also do things like, for instance, you can add in another note, and this might be some value set. And in this case, what we're going to put in is we're going to put in manual values. I'll click into this. It's just a way to store any manual values, and you can also then put in, actually we need to put it in from here. No, not from there.
While you're mentioning cows and sheep, does it actually have a livestock schedule, livestock trading schedule?
We do have livestock. Well, when you say livestock schedule, we've got a schedule for average cost method. Yes, but it's not included in the financials. It's included in the tax return.
Okay.
But it essentially does the job of doing your computation for your average cost method. Okay, so this is just total. Now with this formula one, you can see it's got a little formula here. Now you click on the little formula, and then you've got to use that little @ symbol. So @ cows plus @ sheep. Okay, and tick that, apply the formula. And that just means that when we get into the final report, we can put these in. Now this will also be, you'll see here that you can change whether this hide when financials are empty or just have it. So this is always here, right?
Mm-hmm.
Properties, you can see the properties here where you've got some additional options and you can duplicate. So there's a few extra functions there that you can play around with. Now that we've built this report, demo 1112, we can go back to our entity that we want to work on. And this time through the reports, we'll add that report, but now we're using the Pro version, and we're using the one that I just added now. So I've got so many of them, but it's this one, 1112. Mm-hmm. So we select that 2025, create. And now what we have is we should have a note there that'll direct to our direct cost section.
Mm-hmm.
And right on the end, we added these additional things which are not going to show unless content is added. So it's just, you'd put in whatever text you'd want, because now it's not going to be blank. Okay. And let's see what if we now you notice this will only, you'll know when you're going to lose your credits, because when you click these buttons you'll lose your credits if you paid for them. Any of the where it's got a little $sign, it's going to expose you to losing your credits at that stage. But if you want to look at it, let's have a look. So trading account, we've got our notes. Mm-hmm. And moreover, that's your balance sheet, which is just that traditional kind of approach.
Mm-hmm.
Okay, and our notes. Okay, and it'll just pick up the number and the whatever we called that. And I must have made a bit of I must have already put some kind of thing here by mistake, because I shouldn't have put anything at 16.1, but it's obviously there was something here. But then you'd get your 17, which is whatever text I put in here under under the text sections. And I didn't put in anything for the livestock, but let's go to where is our livestock version? Value set. Okay. Again, you can see this is not going to show, it's not going to have a note number unless, I put those numbers in.
Mm-hmm.
So again, that's very, very much the sort of boundaries and the limits of what the system can do. In this one, you can also drag around. You can do things like move. You can export to Word, and you've got the ability to work with some page breaks as well. If you want to move page breaks around, you can. So I just got to see if I can find where we've got a page break that I can show.
You do it
again.
From there. You can't do it. You can't do it directly from the report. So if you're viewing your report and you see a page break isn't where you want it, you can't.
You can. Yeah, you can. You should be able to move your page breaks around. But I don't know if I've got anywhere where it's just showing on separate pages where I just got to see if I can find the page breaks. Might be a case that, okay, so you've got some extra options here in terms of duplicating the report, the audit trail as to when anyone worked on it. You could archive or delete it out of here as well. I just want to see if I can find the page break. Let's just see. Page breaks. Okay. So we might put in a page break at a certain point if we want it to break at a certain point. So you can see I've put in the page break after number 9.
Yep.
But it might be a case that I want my page break. Oh, this is because I've put it in there, I think. I should be able to drag it along. Yeah, so I probably want it. Well, it's only allowing me to get it into certain spots. Okay. You really think we want to get it at an end of a note? I think let me just leave. Okay, so let's just see, because I did put it up here, right? Let's just delete that page break out. I think we really want to preview it to see what we're going to have. Now, once you've paid for a report, you can make any manipulations for any further manipulations. So that's where you would go, right? Let's possibly see if we can change this. Cash and cash equivalents. You can see it automatically setting our page break. So let's see if we could maybe move it to after cash and cash equivalents.
It doesn't automatically put a page break in if it's in the middle of a section.
No.
And then you've got to go back here to do the page break.
Yep.
As opposed to, yeah.
Yeah, you can't do it there.
Because it's already in the PDF by the time you get to there.
Now, where is my page break? I think it's going to be page break. So I think we tried after cash and cash equivalents.
Okay. No.
Or the thing is we've already, yeah, okay, so let's just try it there, right? So that's after cash and cash equivalents. Then you'd have to look at it like that in the PDF variant. Notes. So that'll be after cash and cash equivalents now.
Mm-hmm.
Okay. And then the other thing, this is obviously where you might also go for this report. Maybe I want to generate it into Word because finally Word gives you the best ability to do your full manipulation if you so wish.
Okay. Yep.
Because some people just want to do some, real
Tinkering.
Fine grain tinkering here.
Mm.
So I'm just dragging this off my other screen now. So it's opened in my other screen. Let's see if I can drag it across. Here we go. So now this is Word, and you can do whatever manipulations you want in the Word doc.
Mm-hmm.
Even down to changing numbers, which you can't do in LodgeiT. So you could change them, which, yeah. So whatever final edits you want to do, if it was requiring that kind of level. But anyway, so that's pretty much how you play around with reports from here. The thing to consider is if you want to know about reporting further, like for instance, you were asking about super funds. Now, the full accounting for super funds, I need to just try to remember where the article will be. And this is actually where we have actually on our website just released our robot, which is actually probably what would help me. And we haven't yet got this in our product itself. It's just here on the website, but this is actually much better than our search. Okay, so let's have a look. So setting up the super fund is one thing, preparing the SMS tax return, financial reporting, yeah. So again, let's go to that one. Yeah. So this is actually, so what I'll do is, because you've expressed interest in the super fund side of things, what I will do is I'll just give you this link in our chat. So you can just open this in the chat, David. So keep an eye out on the chat because I've given you the link, and it's just worth watching the video because this also tackles the dynamics of the way that we have designed our system for super funds, which is slightly different to what you might be used to with BGL, where BGL, when you have contributions to the fund, they treat that as income, and then they exclude it as income, and then they include it as member contributions later on. Sorry, then they include it into the members section later on as part of the workflow. In LodgeiT, anything that's capital related, where the member is transferring funds into the fund or transferring from another fund, rolling it into the super fund, or where they making non-concessional contributions, all of that stuff gets mapped straight into the member's account. You don't touch the profit and loss for that. The only thing that goes through the profit and loss section is any of the actual earnings of the fund that will then get split out amongst the members, if that makes sense.
Right.
So when you generate our profit and loss, you will not see, because you will not map you won't treat any inflows into the fund that are not from the operations of the fund in that section. You'll map them, you treat them straight away as credits in the members section.
Okay.
But if you watch the video, you'll see how that works. And
The reason you do it that way is there?
Yeah, the reason that we do it that way is because there's a limitation. That's a sort of limitation of the software that we had to. It was like a workaround that we had to implement.
Right. Okay.
Yep. So the profit and loss report will not show what is otherwise, because what we did was we essentially retrofitted our current reporting framework for a super fund. It wasn't initially built for a super fund, if that makes sense.
Yeah.
So you'll see when you run it. It's it's still pretty evident that these, especially if you open up that part of the report, it'll be clear to whomever's looking at it that this is what's coming in from the member. But the video there will show you how to do it, and it works with Excel. I've done my demo with Excel, but it applies broadly if you wanted to prepare the accounts in, say, QuickBooks or Xero or whatever. It'll the same methodology should be applied.
Yeah, as long as it's mapped. Right.
Yep. So that's pretty much the demo.
Okay.
David?
All right.
Any other questions?
Well, what's your costing then? How does your costings work?
Well, if you're already using LodgeiT, if you're happy with the free reports where you don't really need the paid variant of the report, you're just happy not to have the notes, and you're just happy when you watch the video, you'll see how the members section works. The members section are pretty much the same whether you use the noted variant or not. The only difference with the noted variants is you get the notes across the balance sheet and profit and loss. That variant is a free report, right? So you can use the system for free to compile those kinds of reports.
Right. Okay.
Now, but in terms of actually how much is the system going to cost, I thought you guys were using it already.
No.
Oh, you're not?
No.
Okay, so are you just going to use it for super funds? Is that what you were thinking?
Well, I'm looking for a solution, for super funds that doesn't necessarily involve BGL or class.
Okay. Yeah, so if you just want to compile reports, you could use it for free, as I explained. I'm gathering that you'll use the same inputs to generate the forms.
Inputs, yes. Like we would just use the Excel template.
Yeah. So it's same with the super fund. There's a part of that video will actually show you, because the super fund tax form is obviously quite different to the company tax return, but you will notice that a lot of the facts will splash across. Not all the facts, because we do use the accounting facts as accounting reconciliation facts, so you will still have to add the tax facts for, say, the income items, because we cannot be sure that the tax facts are the same as the accounting facts. But you'll see that in the video. You'll see how, when you watch that video, how when we get to the tax return, it's mapped, but for those tax facts where the tax fact may be different to the accounting fact, which could be the case with, say, a dividend, and of course with those things like dividends and trust distributions, there's a whole lot of other facts that go along with, just the income that came in, right? There could be credits or TFN credits or, franking credits or all that stuff. That's why we require you to always manually put in those facts. Like, for instance, here you can see, well, this one's actually been filled, but this is the accounting fact that's rolled in here, and it becomes a reconciling item because there's the tax fact here. So the tax fact has to be put in, else you're going to have a decreasing reconciling adjustment until such time as you come in and put in your it's probably the other way around, right? Something like that. Then you'd have an increasing reconciling adjustment for the dividends, which becomes a reconciling fact in the company. Other assessable income where the taxable fact's greater than the accounting fact. Okay.
Right.
And
So
that will work. And when you get to
if
the
I
super
didn't
fund
want to,
yields,
if I didn't want to lodge tax returns through it, was
Mhm.
that the whole? So essentially, all I'm looking for is a product to prepare
the accounts.
a good-looking set of accounts.
Yep.
We'd still
Where are you
use
going to lodge the tax return?
MYOB.
Oh yeah. Yeah, we'll
So we
just
still, I mean, we're essentially an MYOB practice, but MYOB
right.
don't have their accounts don't really suit super funds.
Yeah, and you know
And
what?
they don't have any
ours.
intention to change that at this stage, or there's
Mhm.
some new stuff coming out in January, but they like zero. Everyone just say, oh, they just leave it to class and BGL.
Mm.
Now, there's definitely merit in us going to class or BGL. We've got
Mhm.
multiple funds, but
How many funds have you got?
120.
Yeah, you know what? I mean,
But
you've got to think
we're
carefully if
not
you use it.
using it for all that many either, because we've got a current system which we use, which is sort of a legacy MYB software
Yep.
system, which works well.
Mhm.
But any new funds that come on board with us, we can't use that system. We have
Right.
to use the new system, which we're just having some issues working with that.
Mhm.
And yeah, I guess basically I was just trying to see if there was something else out there that would produce a set of financials and do the member statements and those things that we want it to do.
Mhm.
We'd essentially still be preparing the accounts. We'd be getting the numbers, I guess, from our own system and then putting them into a
Yeah.
template and then producing
Yep.
a thing. But so I guess that's what we were looking for, and still lodging tax returns through our own accounts. But
Yeah, well, you certainly could. Now, whether our reports are suitable for you or not, you really want to. I would suggest watch the video,
I watched
and
the video,
that'll give you an idea. You'll know straight away after you watch that whether it's going to work for you or not.
if I wanted to run a demo or put my personal
Yeah.
fund on there just to have a look at that,
Yep.
that could
Easy. So all you're going to do
help.
is you're just going to go to the LodgeiT website
Just essentially sign up as a client.
and just sign up and just throw in a couple of demo clients. Yeah, you just click get started. You create an account on the spot. Jump in there like I showed you, add in some clients, go and create a report after watching my video and give it a try.
So that, I mean, how do you make any money? You don't make any money out of me in that scenario.
No, but that's just the way the system is built, and we don't worry. Look, we make money when people lodge tax returns, and probably most people would, right? But yeah, we get a few people obviously.
Well, again,
just use the
if
reporting. We don't care.
and
It doesn't bother us.
the system works and it feeds directly into a tax return, we might be stupid to go back and put it all back into MYOB if it's all.
Yeah.
If that was sort of
Could be.
seamless, that the move between the accounts or semi-seamless and the tax return, and we could just lodge directly out of there, then for those funds it might work. And
It might, and yeah, or you might want to rekey it. It doesn't really bother us. You can do it whichever way you like.
All right, and then that's a per the lodging part. That's a per fund scenario, or that's a
Okay, so for you guys, if you wanted to use the product, let's just say that it works for you, and
20 funds that would be lodging.
20 funds, then this one gives you the 20 funds. That's got 20 lodgement. We call income tax returns, company trust partnership, SMSF, fringe benefit, and then we call all other types just these other ones, right? But with this package, you get your 20 lodgements included, and that is $660 a year for that one.
Right. Okay. Yep.
And then you can always add on top. So say you did 20 out of here, or you did 20 and then you needed an extra 10, so it's going to be another 120.
Yeah, right. Okay.
If that makes sense, because you can just buy them on the fly, and the way you buy them is you just buying them through the billing module here. So put a billing module here.
Okay. All right. Well, I'll definitely watch the video. And I guess the only thing that concerns me, I guess, about the way you're saying it's structured is that, I mean, the way we currently do it is show the member contributions and transfers in as an income.
Mhm.
And so we're essentially preparing a profit and loss which shows that as part of the revenue of the fund.
Yep.
So that would be a bit of how that would end up looking, I guess, would be interesting to us to see.
Well, the one way that you might do the workaround for that in the report is you could probably still report those values or those contributions in as revenue. You could still map them in as revenue, but then what you need to do is you just need to put because obviously you got the revenue, which is a credit, then you really need to have a debit to offset it before it hits the profit and loss. And what you could do is you could put it through as no, you just put it as you'd put that part as a profit attribution through the. So let me maybe show you, or maybe I can see if I can do it with very quickly here. I'll just see if it'll work like this. And actually, yeah. So we're saying, maybe this is a roll in from 1B.
Mm-hmm.
Okay. Let me just have that as the only fact in here. Just see. Actually, you know what? It might be easier to just start with a fresh template. Superannuation. Oh. Super fund. So I'll just see what accounts I've got in here at the moment. Okay. So this is my little fund, right, with my template. And have
member info.
There's all my member info. Now, why don't we so what you can do is you can just export that. Okay, so what we have is we have our net profit of 27.
Mm-hmm.
And we do have a roll-in for, do we have a roll-in? No. We've got earnings, we've got, oh yeah, okay. So you see how we've got our employer contributions here?
Yep.
Why don't we just go like, so we had 40 grand, right?
Yep.
Now that's obviously changed our profit. There's a couple of ways that we might be able to do this because we don't really want to show the full 40 grand. So maybe we've got, and I don't know if this will work because I don't know if I've got this
when you're
category.
when you're doing your share of profit down below in the member statement.
Yes.
That's a manual entry, isn't it?
Well, let's have a look at it as it is currently without the 40 grand.
We brought it in. Well, it's got to be manual because you're putting it in a template, aren't you?
Yeah, it is manual, but in terms of the problem here is that we're having to work with the actual profit because of the way that we will then split it into the into the members here, which is not really the split of the profit, because the split of the profit, the way the system sees the split of the profit and what you ultimately end up with is the earnings, right? Because there's that earnings, 14,675. Even that though, let's just see. Let's just see if we do it like this.
But you're entering that. That's not calculating that, is it?
40. So then, the thing's going to be out of balance and we'd need to do a profit allocation. We might be able to do it like that. Allocation of members' contributions. Okay. Because I remember our... Okay, so let's just see if this is going to... Because we don't really want our... Well, I guess it's going to depend on what you're happy with as your profit showing. It might work like that as well. Or maybe I don't even need to put this in. Let's
so
just
in
see.
your members, yeah, I mean in our members statement,
It's because this is already... So
we're
let's
still
just...
splitting out the contributions in the member statement.
Yep, let's just
So
see.
we just do that manually.
And this, as you're right, I mean, this is just... Huh. Where did I save it? Go. File. Save as. It is there. It is there. I don't know why I didn't see it. So choose that file.
I might
Downloads.
might just mean change of mindset from us not to have it in there. I'm just
Yeah.
You're saying that's the way BGL does them too.
Yeah, I mean, I don't actually, personally, I don't think it is. I mean, I don't like the idea of seeing it in the revenue section because it's not really revenue. It's more like a capital contribution, in my opinion. But I know that's the way BGL does it. So let's just see what we end up with here if I use this. So I'll just use our typical, so it's non-trading entity, 25. So you can change that. Now we've got, yeah, so you can see how I mean, this is just revaluations, right? It's revaluations, not comprehensive, which doesn't touch the tax return. Yeah, then you've got the employer contributions, and then you've got however that all drifts in. And this is part of the problem, right? Because we really want to split all, and then there's the less tax, because this is the tax on the profit, but not the tax on the members because of the way that I've done it. And this is where it might not look the best, because you can see, you can see what we're going to end up with is only the 14 as the 14 split, the current earnings and a dough getting mapped in there, the tax, and don't forget the way that we're mapping whatever comes through there is the current earnings get split out, not the employer contribution. So if you're looking for an exact match between these, that's where it's not going to, it's 67,948.
It's not picking up anything there.
Well, that's because we have to say what it is.
Yeah. Okay. Anyway, it might be something we either change our mindset on it, or we it all looks like it's pretty easy to make changes if we wanted to change the template and get it to look similar to what we're doing now. Just might be a bit more manual entry.
Well, you can see how it's going to map. Let me just generate a report. I probably need to play around with it to see if we can get it to work in the way that you would want let's just, okay, so we've completed it. Because I've only got 1 year in this one. We don't need the cash flow. $14, and your members showing here. But again, this is where it's not going to reconcile correctly because well, actually, this is only splitting out the the
Still
29,
something,
right?
29.
But the issue is that but the way that we might get around it is in the mappings. If we go to the equity, because let me just see if we're going to have, yeah, we could actually put that difference. I'll just see if that will work. Because we really need one more value through. That's where this is the only way that I would see it. We would have to put a members.
There.
It's just the 40 as an expense.
Do it like, yeah, below the line is like a transfer to reserves.
Yes, and then the expense,
Leave yourself with a,
we would just maybe
just
put
the
this
profit.
to profit allocation. Don't know if we had a profit allocation in here. See, we do have the profit allocation in our other entities where it just won't show that line item.
Your pensions paid is one, yeah.
No, we don't really want it as transfers out because that's not what we want to show. It's not really pensions paid.
So the pension, if there was a pension, that would be down in that members area as well. That wouldn't be in the
well, pensions is going to be through here. You're going to do your pensions paid out of the members account because you want it to flow out of your members.
It's not appearing in your P&L either.
Yeah. The only workaround, and maybe we need to put it in, is what we do is we just don't show that as but then that brings me back to why we built it like we did, because
yeah,
it's just not going to show properly on the profit and loss report the way that we've built it if you then shove members values in, because you've got to split out the members values as profit, and it'll split out the profit through the profit section rather than how you want it to split out, which is obviously you'd really need two parts to the profit split out. You'd need the split out of the profit for the component associated with the earnings of the member, because don't forget, all of the facts ultimately need a splash into the tax return. And that is where, for the members, you don't.
Yeah, that's right. That's the
you
problem.
See, the problem is, you see the issue.
Where you link to the tax.
There's the allocated earnings is where you want that to come out. You don't want, your allocated earnings, you don't want to include the
contribution
component, which is the members, the contribution.
Yeah.
Well, sorry, the members' contribution.
That
is the limitation on why we built it like we did, I guess.
Yeah. Okay. All right. No. Well, I'll definitely have a look and just see what it looks like. I'll show the other partners, and if they don't see a problem with it, we might.
Yeah. Look, it just comes back to the semantics and your perspective on what is revenue versus what is. In my mind, I think it's okay, because I don't actually think what rolls in from another fund is revenue. The profit is the fund is whatever it generates from its operations, whereas what comes from the member, what gets put in as contributions is,
Yeah, I think it's more we don't see it as revenue, but we're trying to show.
I know, but it's a long.
This is how much your fund has grown in the year.
Well, you'll still see the growth in the members' balance. You'll see the growth in the members' balance, but if you are of the worldview that your members, the contribution, employer contributions, member contributions, whatever the contributions are, if you're of the view that that is revenue, then the system is not going to work.
It's taxed as revenue anyway. So.
Yeah, true. Yeah, I mean it's taxed.
I mean, we show the pensions as an expense as well. So, it's
do you in your current system?
It's almost like a cash flow statement, as opposed to a P&L.
Yeah, and I think the reason we ended up like with this kind of approach is because we have to sort of retrofit it around our existing.
Yeah, and the tax return as well. So it flows
Yeah,
into the
so
tax return.
so that's why, you'll see everything at the members level for a members report like that. And again, that might be limited as well if you want to show the granular detail to the user. We don't have that yet. We don't have the ability to show the granular detail of, maybe if you've got a whole lot of different contributions.
Yeah,
because
it's basically a
this is
members
it.
balance.
Oh no, you'll see these 4 slots.
Yeah.
Oh, sorry, you'll see all these slots. You'll see, any contributions from employer, personal, other, taxes, and then pension, transfer in, transfer out.
Yep.
And that will always show what the members balance is. But that is all done through the members section on the balance sheet, and doesn't touch the comprehensive income section.
All right. And it's not producing an actual members statement.
Well, exactly. So, you might want a member's statement that shows all the other.
Produce a member statement as well.
Yes. Yep.
Yeah. Okay. All right. So that's, it's doing some of the stuff, but yeah.
Yeah. Limited. And you know what? The real limitations, I think, are not so much with the reporting, but more with the bookkeeping when you've got funds that have a lot of investment type things like, you've got a lot of sort of managed funds, and all that kind of stuff is dealt with quite well in systems like BGL and Class.
Oh,
and
definitely.
That's probably why these kinds of systems were never really built for super fund reporting.
So I was just looking for something as a bit of a in between until we decide if we're going to go that way or not as well, just to manage our new funds. But so it might still be of some use to us in that it's